Hi, I'm Vlad, and in this episode we will be talking about order book cryptocurrency trading technique. Order book is a very important concept in trading, both crypto and stock. There are different types of orders which you can have on exchange platform. Market orders and open orders. With a market order, you are buying an asset for its current market price. This order never goes into the order book. If you place an open order, you are telling the platform that you would like to buy or sell when the price hits a specific level. This order does go into the order book. Different exchanges have different order book styles or layouts, but they all have the same purpose. Order book is a visual representation of real-time orders for a specific instrument on the exchange you are using. Order book includes all orders that are available on the exchange for trading. Here you would be able to see orders which people placed on the exchange, and you would be able to fulfill one or some of these orders or place your own order. Order book helps traders with reading the market. It improves market transparency by providing valuable information. Order book usually consists of buy orders, sell orders, and order history. You can find order book on literally any exchange for any time or financial instruments, such as cryptocurrencies, stocks, currencies, bonds, etc. It displays the data of all open orders, including manual orders and electronic ones. In this video, we will be talking about cryptocurrency with order books. Let's talk about how to read order book. Both sides of order book display different information. It shows the amount and price per order with total units of the cryptocurrency you are looking to trade, as well as the price each unit is valued at. Each order book shows amount, price, and total. However, as I said before, different exchanges use different layouts or styles of order books. For example, the amount can be called size, total can be called sum, and the look of the order book can vary. Also, different exchange platforms only show a specific amount of buy and sell layers of order book, which means you can only monitor a specific depth for prices. The amount represents units, the price stands for the price, and total represents total units. What we can see in this example is that there are players who would like to buy 1.399 amount of ETH with USDT with a price at 2799.4 with the current price of Ether of 2799.41 USDT. And there are other players who would like to sell 37.22 of ETH for USDT with price at 2799.41. There is a gap between the two called spread, and in this case it is 0.01 USDT. In another case, we can see that there is a player or a bunch of players together who would probably use 328,000 USDT to get into the long position on uni futures. And by multiplying the price per unit by the number of units, we can calculate how much money the person is going to invest in the order. It is a huge amount of money. The buy side displayed in green shows all open buy orders below the last traded price. Once a bid is matched with a sell order, the trade will be facilitated. When there is a huge amount of buy orders that were accumulated at a specific price level, there would be a support level, or also called a buy wall. In this case, if those orders are genuine, the price will not fall lower than that level until the large numbers of orders is fulfilled. The side market red is a sell side. It contains all open sell orders above the last traded price. The large number of sell orders accumulated for a specific price create a resistance level, called a sell wall. The price won't continue to rise until such orders are fulfilled. When someone places open buy order or open sell order, it will automatically be added to the order book. However, placing the open order does not guarantee that someone would agree to said order, which also means that before the order is executed, whoever placed the order will be able to cancel it. In case the user cancels the order, it won't be counted in the order book. In other words, the order will remain in order book either until the price reaches the set level and the order gets fulfilled, or whoever placed the order cancels it. There is a style of order book that scalpers use and which I personally prefer. I use it since my trading technique is mostly based on order book, as I like to use order book to find big players on the market and play by their rules. This layout represents three main parts of the market. The first one on the left is history orders, which shows what just happened and how many orders were executed, for what amount and at what price. The second part in the middle is the real-time fulfilled orders which are happening right now. The third part on the right side is the order book itself. We can call it potential future fulfilled orders. As we can see in this example, I'm trading ADA USDT futures. The price of ADA is 1.3707, and we can see that there is a big sell wall on the price level at 1.3977. So I will be probably monitoring the situation, and before placing my order, I will check whether this wall is genuine or not. From my perspective, order book can help you make a more informed and precise trading decision. When you are trading, it's very important to find as many reasons as possible to check whether you are right or wrong. So thanks to order book, you can find potential price moves, market imbalances, big players or spoofers, and of course better places to open your orders and close them. If I see imbalances in order book, I can determine where the pressure is coming from, whether it's buying or selling pressure. Then I can determine potential resistance and support points on the market. For example, if I see a large amount of buying orders on the list, I would determine that it is a potential support level or a spoofer. Same goes for if I find a huge number of selling orders on the list for a specific price. I would determine that it is a resistance level or a spoofer. There are lots of manipulative players on the market, even bots who are trying to influence other people's decisions through order book. They are spoofers. They use a huge amount of money to place orders for a specific price level. Those orders are then used to interfere with people's decisions. And when the price of the instrument gets really close to the spoofer's orders, the spoofers cancels the open orders, which means that the market didn't execute them and the spoofer used a clever method of manipulating the market. Of course, spoofers can be anybody, small traders or big companies. Cryptocurrency market is still rather unregulated compared to stock market, so the manipulators have it easier. Why they do it? Well, if a spoofer placed a long order, they might want to increase the price of the instrument. Their large number of orders will make others think that there is a big support on that level and people are going to buy this instrument, because if the price will fall down, the platform will execute the orders on the support level and then the price will rise again. The same is true for when the spoofers would like to buy instruments for the price that's lower than the current one. They execute a short order and create the pressure for prices to go down. What's important is that some exchanges have so-called dark pools. Those dark pools have order books invisible to the public. Exchanges provide this service to large players who don't want for their trading intentions to be known by others. Without the dark pools, the price spikes would be more drastic. If there is a very big player coming to the market and the information about the transaction becomes public before the trade is actually executed, this will lead to huge increases in price as opposed to the transaction happening first and the public finding out later. If you still have some questions, let's just open an open order on my account. For example, if we think that ADA's price is going to rise, we would like to open a long order, but we would like to find the lowest price available for us to execute this order. So for example, I believe that before the price will rise, it will get to this point, let's say at 1.369, where I would like for my buy order to be executed. So I place my open order, and if the price gets to this level, the system will execute my order. When I place my open order, my order becomes a part of order book. In this case, our order size is really small for it to be noticeable. If the order placed is big, the large amount will be displayed in order book too and will be noticeable. There are different types of orders, such as open orders and market orders. Open orders are those waiting to be executed. Market orders are executed instantaneously. Some experienced traders usually like to wait for the price to get to a specific point and execute an open order. Some impulsive traders like to execute trades quickly with market orders. Exchanges usually charge higher transaction fee for those who fulfill their trades quickly. These people act as takers. Those who place open orders and act as makers, on the other hand, are charged lower fees. The main reason for this is that a taker removes the liquidity from the trading pair, while a maker increases the liquidity of a trading pair. Let's place an open order. As you can see, I placed an order for 5 of ADA for a price of 1.369. If the price gets to this level, my futures order will be executed. And let's place a market order. As you can see, our order was executed instantaneously, and we even earned 0.2% of our deal in 2 minutes. Pros of using order book would be that it helps you to see more things when you trade. I would like to ask you, when you run a marathon, whether you run with your eyes closed or opened. The same for trading. If you do not see things or trade by guessing, it would be gambling. But if you see things and analyze them, you would have higher possibility of placing a successful order. As I said before, order book helps traders by showing them the real-time data and hopefully provides a more logical explanation of what's happening on the market. My personal trading technique is mostly based on order book feature. In the future, we will be doing real-time online trading streaming on this channel where you would be able to see real orders, and I will be sharing my trading technique with you guys. So make sure you're subscribed to this channel and hit the like button. I'm Vlad. See you in the next episode.